Let's welcome our guest on stage. Let's put our hands together. We have Mr. Richard Lord. He's the Chief Information Officer, Wholesale Asia Pacific of HSBC. Mr. Leiming Chen, he is the Senior Vice President of Ant Group. Mr. Nelson Chow, Chief Fintech Officer of Hong Kong Monetary Authority. And last but not least, with Ms. Alison Tudor. She is the Managing Editor of Alizila, Alibaba Group's corporate newsroom. Thank you so much for being with us. Everyone, please make yourself comfortable. And today the topic will be what's next and will Web 3.0 accelerate it? Everyone, please.
Thank you. Thank you for the kind introduction. And good afternoon, and thank you for joining us. For the next 30 minutes, we'll discuss the ramifications of more and more companies outside the banking sector offering services such as wallets, payments, and lending. Indeed, many prominent investors have urged companies to consider embedding finance as a key monetization lever, making every company a fintech company. Here to offer their insights into this topic, I'm honored to introduce our distinguished speakers. Nelson Chow, Chief Fintech Officer at HKMA, Leiming Chen, Senior VP at Ant Group, and Richard Lord, Chief Information Officer at HSBC. I'm Alison Tudor-Ackroyd, Managing Editor at Alizila, and I'll be your moderator for the next half hour. So if I may, turning first to Richard.
Certainly.
Customers nowadays want simple, holistic, and direct financial services. Can you tell me, how is this reshaping the financial landscape?
Well, Alison, it certainly is a very interesting time. Hello. It's certainly, I'll see if I can do this without blowing up the mic. Obviously, these are very powerful thoughts that I'm sharing with you. So, look, it is an interesting time, and certainly a large organisation, large international bank like HSBC, we are watching two things, the change and the rate of change, very, very closely. And certainly when I'm talking about what's going on out there and why this change is occurring, I boil it down to two things, which might seem like they're a little bit conflicting, but they're not. I talk about friction and I talk about speed. And the friction point is that a lot of the opportunities that have been identified by fintechs and financial services startups out there only come about because there's friction in the way things used to be. That it used to be a bit too hard or a bit too slow. And and banks are big lumbering animals. It's like, as they say, like trying to teach the elephant to tap dance. The reality is that, and there are reasons for that. We have a duty of care to make sure that we protect our customers' information, that we do proper due diligence, we have to comply with all the things we have to comply with, and that means that sometimes we can be a little bit slow to change. But what the market taught us and the emergence of fintechs taught us was that, we need to be a bit quicker, because our customers were telling us, by the success of the fintechs, that we need to make it easy to do the things that they want to do. And so ease and simplicity and fit for purpose and trying to come up with products that suit the thing that I'm trying to do right now, not one product that tries to do everything, is really important in terms of providing a valuable relationship. The second dimension is speed. And the thing that certainly has happened is that commerce has sped up. Transactions that used to take days into weeks into months, particularly in areas like trade finance and things like that, now happen in seconds. The decision about whether or not I need immediate finance for this transaction, to buy those goods, to ship that delivery, etc., is not something that I as a business might have a couple of weeks to think about. I need an answer today. And so we need to innovate to create propositions and channels and services and products so that our customers can respond to the speed of commerce as it is right now. And so one of the consequences of this is that it's teaching the elephant to tap dance.
Turning to you, Nelson, if I may, do you think digitalisation has the potential to eliminate friction in cross-border payments, that holy grail of finance?
Sure. Richard talks about speed, I think if you look at cross-border payment, a lot of the banks like HSBC or some of the fintechs, they can already move fund very quickly, with a fraction of a second. So I think it's not a technical problem for prohibiting the cross-border payment. But more often, we see it's the probably the regulations in between jurisdictions to jurisdictions. They are all financial institutions, heavily regulated all around the world, so they have to comply with the regulatory requirements in each jurisdiction. So I'll give you an analogy. You pass me a great box of chocolate and you want to pass it to Richard. So each of us have to count how many chocolates are within the box, and we have to seal it, and then I pass it on to Leiming, and he have to do it all over again. Open the box, count the chocolate, and reseal it and pass it to Richard. That takes time. What if we can follow the same set of rules? And that's basically why we started Project Enbridge. We bring together the different regulators, the 4 central banks, whether we can make use of blockchain to help us remove some of the untrust issue and make cross-border payment faster and cheaper.
Leiming, bringing you into this conversation, I really want to explore that blockchain element. What's Ant Group got cooking in this regard? And tell us about the frictionless experience on Ant.
Sure, thank you, Alison. Ant has been at the forefront of innovation since we started our business in payments 2004. Now, through this journey, obviously what we really looked at was to solve customer pain points and frictions in transactions. And one thing we always look at is how we create trust among different players in the whole chain of payments and financial services. Now, we have invested heavily in blockchain because we truly believe that blockchain is a very fundamental aspect of the Web3 infrastructure. And also, it solves the fundamental problem for financial service, which is trust. For example, we have a fairly large technician team globally, particularly in China, and researching into different applications, blockchain-based applications. And I believe we continue to lead worldwide in the number of patents registered in blockchain. Now, obviously, what we look at the application really is the trust, resolving frictions, and easy to use, security, and convenience for all the participants, whether it's from a user perspective or platform participants or merchants, so to speak. For example, our product, let me say application, cross-border payment application for block-based for SME is called a TrustPo. Coming from trust makes things simple. In that TrustPo, we have facilitated cross-border financing services transactions for SMEs. One example is that we facilitate a lot of small SME manufacturers in China, and during the pandemic, they were able to sell many of their products cross-border online, and they receive payments right away, T+1. And that is very, very quick. Why that is possible? Because blockchain, on the blockchain, everybody participating in the transaction make transaction happen simultaneously rather than sequentially as a traditional sort of payment functions and financing transaction would happen. So everyone has this level of trust and transparency in information, and therefore the efficiency in time. So those are the things that we constantly explore. And it is very exciting in the sense that because of the pandemic, the acceleration of digitalization of the economy in various parts of the world, and even in particularly in developing countries, but even developed countries where financial service infrastructure was very, very mature, and the digitalization of the economy continue to make the market participants to be more innovative.
Yeah. Nelson, you briefly mentioned that Enbridge is based on DLT. And I did read recently that Enbridge has been voted, I think, #1 in the cross-border payment space amongst CBDCs. So could you elaborate a little bit more on the experience of Enbridge and why you're, yes?
Sure. Just a moment ago, we talked about how we harmonize the regulatory requirements and create the same set of rules. And Leiming also mentioned about the beauty about blockchain is the immutable records, the ledger. So I think the whole story started in 2017 when we started our project Lion Rock, and HSBC and other major banks were part of the project. We look into wholesale CBDC, but that is for domestic use. And after that, we move on to work with the Bank of Thailand. We believe that cross-border payment is one of the biggest pain points that I think everyone knows. Unless you are transferring money within the same banking group, otherwise you will go through all this trouble, the slow payment, and also the expensive cost. So last year we started to work together with 4 central banks and BIS Innovation Hub. So we bring together of course, the technical people and also the legal people. So we have set up 4 subcommittees, one looking into policy, one looking into legal side of things, and one is to develop the new platform, and the other one will look at the business, the use cases. So we are, as you mentioned, it's ranked #1 in terms of maturity. Is because of the 4 central banks are really keen to try to use innovative methods to solve this age-old problem. Yeah.
Thank you. Okay, disruptors or partners? When we think about, I did read an Accenture survey that showed 41% of SMEs are interested in using the services of fintechs. How will this change, impact banks? What are banks doing to meet those needs? Richard, I know that HSBC is exploring blockchain, please elaborate.
So, I can't give away the crown jewels, right? So I need to speak a bit in generalities, but so we partner with a lot of fintechs around the world, and we are very active, and we invest in fintechs around the world. And what we do find is that a lot of fintechs are very clever at solving for a particular problem in a particular industry for a particular class of customers. And that's great because technology has democratized a lot over the last 20 years. When banks were built on the large technology infrastructures that run our business, you didn't have things like the internet. You didn't have things like cloud infrastructure. You couldn't build quickly and deploy everywhere, and it certainly wasn't cost effective or accessible for a lot of businesses. And now technology means that the cost of entry for somebody to get in and solve a problem for a particular space is a lot lower. You can start a business with a credit card. Now, what that means, of course, is that fintechs quite often, by definition, have very narrow and targeted propositions for that particular set of customers. And, of course, not everybody's business is that simple. There's a lot of adjacency, and there's a lot of upstream and downstream things that businesses have to deal with that the individual fintech will not necessarily be able to solve for very effectively. So we see part of our role as a bank as being an enabler of connectedness. In Hong Kong, we have a terrific product called Business Go, where we're, through a part of Business Go called Smart Solution, we're actually building trusted connections between some of those narrow solution providers who provide high quality services that started as fintechs to target customers across Hong Kong and hopefully beyond Hong Kong. The other thing I think is that we have a lot to learn from these businesses, and so I personally get a lot of joy out of spending time with the creators and the founders and the entrepreneurs because it's genuinely a two-way conversation. One of the challenges for us as a bank is just the scale of what we do and the way we have to do it. We move trillions of dollars every month. We are the largest trade finance bank in the world. We have to be on 24/7. We are considered a public utility in Hong Kong, right? So the scale and sophistication of what we have to do is just well and truly above what a lot of fintechs have to consider as they think about their business. However, we have a lot to learn about the pace of innovation, about customer first, about design thinking, about just give it a try sort of mentality. And so when we have a successful partnership, and we have a lot of them, it's because we talk about our world and educate and bring people up to where we are like we are because our customers need it. And we also learn a lot from them about learning how to be a customer-led organisation. So are they disruptors or are they partners? The good ones are both.
Good
yeah,
one.
I think I would echo what Richard just said, and I think the relationship between fintechs and traditional financial institutions are complementary. And I think the misconception is fintech companies are disruptors, which I disagree, and I think there are a lot of things that we can do together. And Richard mentioned that at HSBC they move trillions of funds every day. Perhaps 80% of them are for big companies, but what about 20% for SMEs? That's where fintech companies come in to work with financial institutions to figure out what is the best way to service SMEs so that the cost will be reduced in a way that is beneficial for everybody in the transaction. So I think going forward, this is going to be the trend.
Yeah, I agree with that. And because even business is democratizing, right? Like what it took to build a company that could sell in 50 countries 25 years ago was hundreds of millions of dollars. With the credit card that you started your company with and a Shopify store, you can be selling in 50 countries tomorrow. And so with a changing shape of commerce and the changing shape of business, we have to evolve to be able to support and leverage and provide value. I mean, ultimately, we exist because we provide value, trust, and confidence. And so if we continue to do that and grow with the way the market's growing, then we'll be here for another 155 years.
Leiming, Web3, major buzzword right now. I see it on the poster behind us here. Can you break it down for us? In a nutshell, what will be the difference for the world of finance from Web3 from Web2?
I think it's just further digitalization of what we do and how the economy is going to ride from a digitalization. And I think a lot of things sort of, as the industry evolves, as the economy evolves, and I think I totally agree with Nelson just mentioned the technology side, whether Web 2, Web 3. Technologically, we can get there. It's really the regulatory policies and how we sort of facilitate Web 3 based new mode of financial services. And I thank people like Nelson in the regulatory side and try to push innovation. And without that kind of efforts, it is going to be very difficult, right? So, on the sort of cross-border payment side, and what we are looking at really is how to enable the travelers to use one payment method to really travel everywhere. And that involves a lot of different jurisdictions in terms of regulations, etc. So we have this cross-border payment technology solution and a merchant marketing solution called A+. And that is to really work with the merchants and work with users to solve those kind of cross-border payment issues. And that is, going forward from a Web3 perspective, that is going to work very nicely with the digitalization of the economy.
Thank you, thank you. Okay, Nelson, let's get real. Embedded finance, it's still in its infancy, and there are myriad risks to the system. From sanction busting to money laundering. Where do the regulators have to, how do the regulators strike that balance between protection and innovation that is needed?
Yeah, I think the important part is we have to believe in innovation and technology in the first place. We know that it's happening. It's unavoidable. You have to face it, and you have to probably get your hands dirty as a regulator to test out some of the new technology before you understand what they are doing. So this question was raised also a couple of years back when we, Leiming and myself, sit in the same sort of panel. But at that time, I think the atmosphere is a lot different. 5 years ago, there are more talks about whether the TechFin or the fintechs are sharing the lunch of this big guy, right? But nowadays, you can see they can sit next to each other nicely together without fighting. So it means it's quite a...
I don't want to fight with him.
Yeah, it's quite a good balance already. So for the first 5 years, I must admit that we move relatively cautiously. So you can see all our initiatives, we test out with pilots, and maybe a year after we revise or enhance the policy. It's because we also need to evolve, together with these players. So in the first 5 years, you see this sort of like a feeling, crossing the river by feeling the stone. We do it step by step. But last year, if you can look at our new initiative, which is a really holistic one. It's called Fintech 2025. It has more than 18 initiatives bundled within 5 pillars. And the first pillar is all bank go fintech. So it can tell you can tell that we are more confident because after 5 years of testing, we know we need a more sort of visionary plan. So hopefully by 2025, a lot of the existing banks and financial institutions will adopt technology fully. But of course, there is another side of thing. If you look at the past 48 hours or 72 hours, you see how come stablecoins are not really stable and that sort of thing. You can see all that. So that means when it comes to consumer protection, the regulator has to come into the picture. So if you allow things to happen like the Wild West, you will encounter issues like that. So it's a sort of a balancing act. But all in all, we are confident that innovation will drive all the financial institutions to provide better service to their consumers. And now we see, although they are an incumbent, but they are very progressive. You can see all these advertisements and all these investments that are put into fintech. And this guy, of course, they started as a TechFin, so they're progressing very well. So hopefully, the next time we meet with each other, you'll see an even better picture.
Thank you. Time's moving on, and I want to give a final takeaway to our audience. before the awards ceremony. So the lightning round, my favorite part. Okay, how big a slice of the pie will embedded finance capture of the SME market, do you think, by 2025? Okay, so pick an answer. I'm going to give you a list and tell us why. Will it be A, 0 to 25%, B, 25% to 50%, or C, more than 50%? Okay, so I'm going to start with Richard.
It's early days for embedded finance, so and I hate to tell you, but 2025 is 31 months away.
Yeah.
So I'm going to go with A, 0 to 25%. And it's not because I don't think there is a place for it. I go back to my comment about speed. I think that the market has not yet fully developed fully mature propositions, fully mature customer journeys. We've got a very wide swing on the way these things are priced from non-bank entities through to bank entities. So I think we're still turning the soil and planting the seeds. So I'll call 20 to 25.
Leiming.
I would agree with Richard on the sort of a more conservative side, and for the reasons you mentioned. But again, if we have more people like Nelson working with regulators, then I would say B.
Pressure's on.
Very nice, yeah. He's very good with people.
So I have to be more aggressive to make this more interesting, right? I'll choose 50%.
Yes.
Why is that? Is because, well, in history, many things are triggering points and it will turn people's behavior. And the introduction of iPhone is one thing. So it changed all our lives, right? In the old days, I remember if I travel, my dad will get a map. If you drive from one place to other place in Australia, in America. But nowadays, you just carry a phone. So it changed people's way of doing things. And COVID is another a game changer because in the past 2 years, you can see all this adoption rate is much higher. People's using of e-commerce, people's even in Hong Kong, because we used to be so convenient, right? You go to supermarket, why do we need e-commerce? But COVID has changed that. And I can't remember when was the last time I visit your branch and talk to my relationship manager. So everything is on my phone now. So I believe I would say 50% because there are still a number of years ahead of us, and I hope that all together we can make that to happen.
See, I think the function of fintech is really pushing regulators from A to C. So I think together we can make it happen. So after hearing you, my answer is C.
But it's only my personal view, not representing authority.
You said it now.
Remember, this elephant's got a tap dance.
I see. So at 25%, that's 120 billion opportunity per Accenture. 50%, that's up to 240 billion market opportunity there. So we're talking big numbers. So anyway, we have come to the limits of our time here today. All that remains is for me to thank you for joining us and to thank our panelists for their insights. Thank you so much. Thank you.
Genuine
Thank
pleasure.
you. Thank you.
Thank you very much to all of you. Thank you, Alison, Nelson, Leiming. Thank you, Richard.